What do you bet on at this point, as so much of the U.S.-China trade dynamic seems fluid to the point where, sentiment flips day to day? How good is this good news? How long does it last?
Well, what a difference an hour makes, let alone a day. I think we have to be somewhat cautious about this. But heading into Q2 earnings season, a lot of the investors I spoke to, the assumption was that there was going to be a de-escalation in the China trade war, and that they're going to look past this earnings season with an ultimate kind of trade resolution before the 2020 election. Now, there's been some volatility in between that, but I think investors still believe that there will be some sort of resolution. And if there is a resolution, these semiconductor stocks are going to go up 30, 40, 50%. I mean, we already see just a whiff of them going up just on a delay of a tariff. But actually, business on the ground has slightly improved. We're coming out of the Q2 earnings season. Inventory correction. The industry's been in inventory correction for the last several quarters. We're now getting to kind of inventories levels are hitting a bottom. We're starting to see some bookings stabilize coming out of China from some of the leading semiconductor stocks. China automotive, which has been very weak, China industrial has been very weak, is now starting to kind of reach a bottom. And those are positive signs that, at least on the inventory level side, we're not at excess inventory. We're kind of at the bottom, and there could be a rebound once if demand snaps back.
Okay, Steve, there's so many different narratives running through chips right now. I'm thinking back to Qualcomm's call just a week or so ago, where they said because of 5G coming, there's been this big pause in 4G and in OEMs coming out with new devices. So that's a negative for certain chip players. How much of this should really be about trade as far as investors focus, and how much of it should be at the more micro level, different factors affecting different segments of the chip business?
Well, I think the investors are going to have to start focusing at some point again on the underlying business. And while there's some signs of a bottom, I think there's still reasons to be a bit cautious. Semis are interesting. Over the last 12 months, they're the fourth of 5 tech sectors in terms of performance, but over the last 3 months, they're the second. They're up 30% year to date, and yet the business has actually gotten a bit worse. You've seen a number of companies like TI and Microchip and others talk about their automotive and industrial exposure being a bit of a negative. Within semis, it's actually been the semi-cap equipment companies like AMAT, KLA, Lam, ASML that have really outperformed. So there is a risk that maybe this gets settled, maybe it doesn't, but the business doesn't improve the way the stocks seem to be discounting here, and you could have a pullback. At the same time, there's some real positives secularly. You've got consolidation helping margins, and you've got semiconductor companies selling not just to tech companies, but now to industrial, automotive, and consumer, which increases their TAM longer term.
Yeah, I agree that there's a lot of uncertainty. The only thing I would say is that inventory levels that were very excessive, that would create more volatility in the company's earnings, are now at bottom levels. So if you look at Microchip, for instance, their distributor inventories at 32 days. If you look at over 10 years, it's averaged between 27 to 42 days. So they're on the low end of their historical distribution inventory level. That means there's not a lot of excess inventory in the channel. So if we do have some sort of snapback in demand, whether it's a trade resolution, whether it's another catalyst, whether it's 5G, we will see a pretty snapback because people are not carrying around a lot of inventory. But as we go into 2020, and these stocks are still trading at pretty big discounts, 20, 30% discount from its peak multiples. So we like Microchip, we like ON, we like Micron. We're avoiding high valuation names like NVIDIA, which are trading at 30 times earnings. There's more risk there, in our view.
But, Steve, what about Huawei? We've got that short-term exemption that's set to expire in the coming days. We'll see how, I guess, all of that plays out. But that's not involved in any of this trade and tariff news that we're hearing today. How big of a risk is that still for semiconductor stocks?
Well, still a bit of a risk, though. Perhaps the surprise during 2Q earnings was that a number of companies started to ship again to Huawei, sort of older product, 28 nanometer. So in fact, for a number of chip companies, it wasn't as bad as expected because I think investors thought it would just be completely cut off. But again, while distributor inventories have improved, and particularly for Microchip, inventories on balance sheets are still 30 days above normal. And Intel is indicating that cloud demand probably does start to come back in the second half from the hyperscalers. But enterprise and government business was down 31% in the quarter, and they and a number of other companies don't see a second half improvement yet. So having followed the enterprise space, I'm probably a little more sensitive to that side of things. And that, I think, is going to take a while to turn around, even if Huawei from here doesn't get worse.
Yeah, I think I agree with that. Internal inventory at the chip companies is still relatively high, but they're working down that internal inventory to hit their targets. But if we look at Huawei, a lot of these companies had good results in the second quarter because they pulled in a lot of orders, and Huawei is actually gaining a ton of share in the Chinese smartphone market. They're actually gaining a lot of share against Samsung and Apple. Yeah. So a lot of those orders helped. However, most companies that are exposed to the Huawei supply chain have basically taken down any Huawei exposure in their third quarter guidance. So they're not forecasting a lot of Huawei revenue because of all the volatility regarding the licenses. So the Huawei issue, I think, could be being de-risked because in the guidance, we're not factoring a lot of Huawei revenue. Qorvo, for instance, is factoring in maybe $10 million of revenue. Right. Huawei used to be, 85, 90 million.
Yeah.